Hello, welcome back to WINFXTRADING YouTube channel, the only channel that has been optimized to make you rich trading the Forex synthetic market. If this is your first time of visiting my YouTube channel, do your best to subscribe and turn on the bell notification so you get notified each time I upload a new content, and try to like and refer your network to this channel so that YouTube will push us to a higher level of audience. In today's video, we shall be discussing this topic: zero differentials calculus to Forex synthetic signal synthesis. So this is, a very unique but powerful topic that is going to revolutionize your trading status. It's going to actually help you. But what I'm doing is a kind of preamble. This is a deep and advanced course in trading. But what I do is I give you a preamble. But if you want to go deep, if you want to really make use of this and make steady profit, like you make steady profit and you rob the brokers, what you need is a deep mentorship and course, or a kind of subscription to VIP signals relay, so you can go find this kind of stuff. But that's by the way. So these are the documents we're gonna read. So we consider critical points: inflection point, continuous point, zero energy, infinite energy, equilibrium state, magnetic dynamics, entry input probability, risk allocation, profit optimization, risk minimization, zero infinity risk reward, risk management supremacy, smart human timing. So these are the topic. These are the elements of this topic. And if you can stay to the end of this video, you will learn a lot of things that you don't know before. Okay, right now I'm going to run the theoretical part of this content before I go to practical charts. Right now we start with this arbitrary price movement on a chart. So take for instance, this is price axis, this is time axis. So this is time axis, it's horizontal, and the price axis is vertical. This is T, time. This is origin. This place is origin. Okay, so this is origin. Now if we take this asset to be 𝒓𝒊𝒒𝑧, for instance, 𝒓𝒊𝒒𝑧, go to USD for instance. Okay, so we have a price movement, arbitrary price movement like this. So we will take the market to be uptrend. Okay, we take the market to be going uptrend. Okay, and then we now consider a situation where the market changes trend, like this one, like this one, and the market started changing trend. Right now, what I'm trying to consider here is how to apply this to this topic. So we are talking about rate of change, liquidity, like if a small change in price occur, that is DP, and if a small change in time occur, that is DT. Okay, the ratio of DPDT is very important. Okay, so when you find this ratio, it becomes zero, because we can get equation or a function that represents the price movement against time. Just as we have done it using high-level numerical analysis, we can actually get the line of best fit, or even the curve of best fit, a curve that can fit this price movement. If we can select many points on the price chart axis and the equivalent or corresponding time axis, we can actually use high-level mathematical principle to fabricate the function, basically multi-level function like discrete function, because you may not find one function that will represent the whole price movement over a given period of time, but you can find various functions at different time intervals, and you can deploy this rate of change analysis to couple them and connect those different functions. Yes, you can basically couple functions if you can study their calculus behavior. So here we have that if dp is zero, for dp dt to be equal to 0, dp dt, because we are talking about zero differentials, that is when the rate of change of one quantity with respect to another is 0. For dp dt to be 0, then dp is equals to 0, but not dt. Dt is not necessarily going to be 0. Okay, dp dt is not necessarily, can never be 0 for dp dt to be 0. If dt is 0, then dp dt is infinite, and that is what we call infinite energy. In such region on the chart, the price is moving with the highest speed, highest acceleration, it has the highest volume, it has the highest volatility. Everything is maximum, and so that is another stuff when it comes to infinite energy. But not going there. In reality, to make dt equals to 0 might be very, very unrealistic. It might be very unrealistic, but it could happen during news events, or when the volatility is practically, like when the market maker decide to make volatility high over unpredictable time, like over a short interval of time that you cannot be able to actually measure. There are times you cannot, even with nano instruments, you can never measure such time. So the market just spike up, just like boom and crash can be modeled with such stuff, you know. So if such happen, the market is at maximum, zero infinity maximum energy. So that's something you should understand. So, but the most important thing is to start with zero differential, because we need to be in a finite state for we to predict future. You can't predict future when you cannot measure things at level that you cannot measure things. You cannot be able to predict future. So we need a situation where we can measure things are measurable. So that is zero differentials. Okay. At zero differential, you can be able to measure things whether with your mindset or with other measurements, methods, other measurement methods. So here, for the PDT to be 0, dp must be 0. That means the price, the rate of change of price will be 0. The price will not be changing. No matter how large dt is, dt should not be equal to 0 for this zero differential to exist. But no matter how large or how small dt is, but not 0, dp must be 0 for dp dt to be 0. Okay? So when the dt is 0, we now talk about critical points. So critical point can be a support or a resistance. Simple. So when the dt is 0, okay, we say that the market is stationary for that dt, for that interval of time, no matter how small it is, no matter how large it is, but not 0. So it is what? Stationary, because price is no longer changing. So in reality, dt being equals to 0 might not be a point event. So it will be a zone event where a range of price is considered stationary stationary prices, because market cannot leave that range. They have to remain there for a longer period of time or for some period of time, waiting for infinite energy to exist, or waiting for the BTT to be greater than 0 or less than 0. Okay? Because the BTT can take a lot of state. The BTT can be less than 0 over a given interval of time, and the BTT can be greater than 0 over a given interval of time, over a given DT. Okay? So when we have this, so it's left for you to study the stationary point in the market. Stationary zones in the market are usually modeled by horizontal lines, while infinite states in the market are modeled by vertical lines. Okay, we can say from here to here is infinite state. Okay, and from here to here, which is modeled with horizontal, is what? Finite or zero differential state. Okay, as a trader, what you actually trying to do is to take the PDT equals to 0 as an input to create the PDT less than or greater than 0. Okay, as an output. So our output is to find the PDT that is greater than or less than 0, like the PDT that is not 0. And our input is to look for the PDT that is exactly 0. Okay, when you're able to find out this, you can be able to trade properly. And then you deploy other stuff, probability, energy, magnetic dynamics, that are actually here, and other stuff that I'm mentioning here. Okay, so when you discover where the PDT is 0, an example is, you see, here the PDT is 0 here because the price is not changing, and you can model the line, the charts with a horizontal line. The price is not changing, so the PDT is 0 here. So this is an input. An input that horizontal line can be modeled as a zone, so you extend, give it a thickness or height, become a zone. So the moment price left that zone, you know, it's no longer at differential state. It's no longer at zero differential state. That's why you deploy the loop analysis or the range state analysis, whereby you cover it with a circle. So when price line create outside this zone or range zone or a kind of differential zone, zero differential zone, you have an output signal that you can trade. Okay, so that's by the way. So these zero differentials are the resistance and support. That's what is. I'm trying to validate. I'm trying to build your confidence using catalyst-based analysis. So these resistance and support are called zero differentials because at that zone, the rate of change of price with respect to time is 0. Then if it is 0, then what is the measure of energy? The energy E or W is what? Is a function of speed. Energy is a function of what is energy, because we have to consider energy in form of movement, not necessarily potential energy. But yes, potential energy is necessary when you are talking about, the amount of profit you're gonna make. Actually is necessary, but we'll pretty much work on kinetic energy, movement energy, which is kinetic energy, which is this is half this is equals to the half of the mass and the square of velocity or speed. Now, this mass here is not something you are going to see as a physical mass. Most time in mathematical analysis, certain things are taken to be arbitrary. We can assume that the mass in the market is 1, and it's not measured in kilogram or whatever, but it's just 1 unit, it's just 1. But the velocity is realistic because price have to be moving. But in other contexts, we can assume that the mass is the total number of traders in the market. But that's by the way. Now we also know that velocity is used to measure. We can also say that acceleration is velocity over time, the change of velocity with time, right? That is acceleration. In other words, we can replace the velocity with at, so that we have a square and then t square. Okay, now time is measurable on the chart. Acceleration can be given any kind of number. So we see that the energy is directly if time is constant and mass is constant, then half is also constant. The energy is directly proportional to the square of acceleration. Okay, the energy is, so if energy is zero, acceleration is zero. Okay, and acceleration is also zero if dp dt is zero. The reason why the acceleration will be zero when dp dt is zero is because the reason is because if price is not changing, then there is no movement. Okay, if price is not changing, there is no movement. Price itself is a speed. So take P to be equals to V. Take P to be equals to V. It's as simple as that. So if P is V, then dV dt is acceleration. And if it is zero, it means that the energy is zero. Okay. Now, zero energy, zero differentials, these are inputs to an arbitrary range state or loop in the market. So when these inputs are processed and the market started creating a line outside those inputs, outside those range states, which are characterized by zero differential and zero energy, what you need to understand is that the line coming out of them is now called infinite differentials and infinite energy, and that is what you should be trading. Okay, that is what you should be trading. So you see that the market start flowing like this, going downward, so you can sell if you want to sell. But for me, I'm not going to sell in this kind of inputs, because this input is creating a counter trend. So I'm not going to sell. The market is uptrend, as I know. So what I'll do is I'll wait for this, the input with zero differential and zero energy. You can see that the idea of zero energy is very important in stop loss placement, because you want to place your stop loss where the energy is zero in the market. Yes, if you place your stop loss where the energy is zero, it means that price can never come there, because there is no energy to push it to that place. There is no energy to push it to that level. There's the energy change direction, so there is no energy directed in that state. So what you need is to locate zero differentials and the locate zero differential and zero energy levels, and then your SL will be there, and then you cannot take trades from the output side of the market, where it is leaving the range state and is going in the direction of infinite energy. So this is infinite energy. Okay, your SL is here. The only way your SL will be triggered is when the market have performed the infinite energy event and reach a potential, like reach an infinite potential energy, like, because this is necessary, because I don't want to talk about potential energy, but it's necessary. If it reach an infinite potential energy, like if it reach critical point where it will no longer be inflationary, like it will no longer continue, but you want to reverse, then your SL is going to be at risk. And in that situation, when market move in your favor and get enough profit, you add your you try your SL to the entry to make the risk zero. Okay, so that is great. So this is the fundamental, this is the like the theoretical part of this. But that there are other things I mentioned here about equilibrium state, magnetic dynamics, probability, risk allocation, profit optimization, risk minimization, zero risk reward, risk management supremacy. Now, if price, let's take an uptrend, or let's take a kind of um general market, like arbitrary market, like a market that is generalized, a kind of typical market, and then let's draw a typical market, a market that is maybe have this form. This is a typical market. These are typical markets. Like markets can just flow like that. Okay. Market can be, generalized, something like this. Okay. So you can see a lot of movement. You can basically see different kind of movement. You can see different kind of movement, something like this. Okay. Now, when you look at this, you have to define what you really understand about that market. So if you are looking for a buy, it's not what you are looking for first, it's study of the market. And when you study it, you write down your conclusion. When you write down your conclusion, you now say, okay, your conclusion is buy. Okay, in that buy, how do you get optimal profit? How do you know the right probability, like how do you know the right entry? Okay, and the risk you are going to allocate there, because your entry is under probability. Where you want to enter may not be where you entered. Okay, so probability and profit optimization. How do you optimize? Then how do you reduce risk? How do you increase reward? Okay, so okay, take for instance. Okay, take for instance, I detected this zero differential because I already know that this market is moving up, is uptrend, because there is break of structures to the upside. There is market is making higher high, okay, and higher lows. Okay, you can see that the highs and lows are actually zero differential zones or points. Okay, simple. So here, I locate this zero differential and I put my loop like a circle. Just give it a finite geometry. And then I started seeing a line at putting or going out of this circle. That means I have to buy. Then what I need to do is to place my also outside this circle, below the circle, because I'm buying, right? And then, so this is my risk. This is my risk R, small r. Okay, okay, so we still have it here. So I put my SL here. So small r, this is my risk. Okay, and then this is my circle, the output. I enter this market maybe somewhere here. So this will measure my SL peep. Okay, the SL peep will be there. Okay, I will measure my SL peep, like the SL peep, the amount of peep I'm risking for my stop loss. And then I'm going to, because I know it's uptrend, it's making higher high, it's making higher high. Okay, so I know it's uptrend, so I'm going to hold this trade longer. I'm going to hold this. I really want to experience the uptrend. I really want to hold this trade until it make higher highs or create more upwards movement. Okay, I don't care about the retracement or the counter trend, like, or other kind of movement. I just care about the fact that this market is going to go to a particular price. So you see, this is where I place the also because it's of zero differentials, and then this line that is going out from the circle, this output line, this is infinite energy E and infinite differential. Okay, I mean this line. Okay, I mean this line. So here on this zero differential, we also have zero energy. The energy is zero. Okay, so that's why the SL is there. And you see the market fly. I'm going to give you an example with gold and volatility 75 index, and then I will end this video. But I really need to talk much things. There are a lot of things. That's why I said this is preamble. There are a lot of things to discuss because it's a deep topic. So let's continue. We shall be using line charts because with line chart you can be able to study the price movement using calculus based analysis. Now look at what you need to know here. First of all, you consider the trend of the market. So the market is making higher highs, higher lows, and so it's uptrend. So we are looking for zero energy and zero differentials. And how do you know them? You look for where the price cannot cannot react. You look for where the price does not exist. Yes, like the line, the price line is not there. Okay, it is not there. Even as you are looking at the price is moving, we can say that here anything we can say that if we look up here, this place that through this line, if I define a zone there, we can say that it is zero differential because price is not there. There is no price there, right? So here you define this. Look at this place. Just connect 2 points or 1 point, whatever you can do. And then when you connect this or more, you can connect as many points as you can, but let it be at least one and extend to the right. This is called zero differential. Yes, in the zero differential zone, the price line can enter that zone. It's possible, but it cannot go against that zone. This block I drew here, you can see there is no line. As I've drawn it on the chart, there is no, you see that there is no line coming out, going against it. It can create line in another way, but that should your own is to locate where there is no line. Okay, so there is no line here. So this is what we call zero energy equals to zero, and the PDT equals to zero. Okay, so that's cool. So you cannot see the infinite energy here. From here to here, we have infinite energy. We have infinite energy. Okay, we have infinite energy. That's why gold went up. Simple. That is why gold went up. There is no government or all this stuff. Even the government stuff even human beings don't know what control them. That everybody is molded by this calculus of a thing. We are living in a world of change. Your aim is to understand after a change, where are we heading to? Are you getting me? Okay, so this is how this market fly. Okay, so this is a support level in this case. So zero differentials are support or resistance. So in this case, this is a support level. Okay, so this is infinite energy, and then the PDT is not zero. It's not equal to zero, meaning that the PDT exists and is measurable, and so the market fly. Okay, so that's cool. Now let's consider when the market is, when we get a resistance different, like when we have a resistance as our differential, when we have a resistance as our differential. So this is support. Okay, now is it possible to get this? Is it possible? So we'll first of all define the trend. We need a market that is breaking large levels, measure key levels, like it's breaking measure key level. You can see that price break out of here, price break out of here, and not only that, it went ahead. Simple, just one break of major level is okay for you to know direction of market, right? So it break out of this major level. This is a very strong level. Price break out of it, retest, and continue going down. So we can say it's a downtrend. So the main thing is to know the trend. It's very important. Okay, you need to know the trend. Okay, so another way to know the trend is when you connect measure swing point. Remember, I'm on a daily time frame, so try to at least be on a higher time frame to know for this thing to work. So you see, it's pointing downwards, so the trend is downwards, right? Cool. Now, when you get this idea, you look for zero energy levels. So here we have this. Simple, as simple as that. We have that there. The line does not exist outside this rectangle, like beyond this rectangle. It doesn't exist, meaning that if we can derive an equation that model this support, and if we allow this this is a resistance. If I allow this resistance small r, if I allow this resistance small r, capital R, to be equals to P of T, because it's going to be a function of time and price. Okay, it's going to depend on price. So if this resistance is a kind of is derived from a price function over a given period of time, then we can call it R is equals to P of T. Okay, now this R is not less than zero. With respect, like this R should not be less than zero with respect to what we want to do. This R should be greater than zero. Rather, it should be greater than zero. It should not be less than zero. Okay. I'm sorry. This R should not be, it should not be like, what I'm trying to say here is that this zero differential is a resistance. But to explain it, how it works is that this R is in such a way that P of T is equals to zero. Now, like P of T is equals to zero if P, no, this is not what I mean. What I'm trying to say is that above this resistance, there is no price action. That's what I'm trying to say. There is no price movement based on the current state in the market. So it is still that differential that you are going to use. It's just what it means. First of all, the P, the T here is zero within this rectangular zone is zero. Then beyond it, P of T is zero, doesn't exist. That's what I'm trying to say. But below it, P of T exists and is not equal to zero. it can be greater than 0, it can be less than 0, but it's not equal to 0. In other words, beyond this rectangle, beyond this zero differential, the energy is also 0. So you can see that you cannot be looking to buy, rather you look for sell. And your risk management, that is what is most like, it's very, very important, the risk management. So you really wanna get high risk reward in this inside this zone. And how do you do that? You move down to candlestick to men and then do a serious analysis to see where you can actually put your SL. And then your risk reward is also very important. Your reward is very important. So once you place a trade, just be monitoring the behavior of this market, like where it can break level. Okay, so if it break level, then it means it is continuous. But if it failed to break level in your direction, like you sold, but it's no longer breaking level to the downside, but it start breaking level to the upside, then it means you have to take your profit. So this is an idea of profit optimization. Okay, so for for infinity risk reward, because when you come here, we have zero infinity risk reward. It means that if you can get zero risk, okay, if you can get zero risk, so for you to get zero risk inside this zone, you have to enter this market at the extreme point of the zone. So you can enter here on the top here, if you're able to detect it, or if you're able to know that this, if you know the end point, like the actual point where that market is going to experience the stationary, like it's going to have that zero differential. So if you know it's here, you enter this market and then you make your SLP to be very, very tiny. That is what you mean by infinity risk. At that level, you can now use this formula to calculate your loss size. The formula to calculate loss size is the risk, the risk, the amount of money you want to risk over SLP times peak value. Okay, so that's good. You can see that if you make your SLP go to 0, your reward, your loss size will increase to infinity. And when your loss size increase to infinity, your risk reward have increased. So I've talked about optimization, profit optimization. I've talked about risk minimization, that is making your risk to go towards 0 and infinite reward. That means when you minimize your risk, your reward will be infinite. So that's good. Thank you. Keep coming and make sure you stay tuned with our channel. Bye for now.